then I went into high tech, lost lots of money on the dot-com crash. And that's when I realized that I want to be more in control. I had a lot of money invested and working for companies. It was very exciting to work in the high tech field, obviously, with all the stock option and everything. But after I lost all that money in 2001, I thought I want to be in control. And that really focused me on passive income and said, this is what I'm going to do now.
Welcome to the InvestNest Real Estate Investing Show, a community for real estate investors to learn, network, and grow. Be sure to join the investnest.com and start learning and earning today.
What's up, everybody? This is Travis Murphy, your host of the InvestNest Real Estate Investing Show, podcast number 15. We've got another great invest guest lined up this week. Eric Martel is going to join us to discuss his real estate investing portfolio and his turnkey rental business. But before we start that, I want to remind everybody to check out the investnest.com, create your free investor profile, network with other members on the site, check out our articles and blogs, and create your own real estate investing blog. We're also on Facebook, Instagram, and Twitter at the InvestNest. And if this is your first time listening, the InvestNest Real Estate Investing Show is a weekly podcast where we have guests join us to discuss all things real estate investing, from house flipping to rental properties, all the way up to multifamily syndication. So hit that subscribe button and be sure not to miss out on any of our future shows. And now let's welcome our guest. All right, Eric, welcome to the show. Thank you for joining us.
Thank you for inviting me, Travis.
Can you tell us a little bit about yourself, what it is you do and the type of investing that you're involved with?
Yeah, sure. So I bought maybe kind of like, if we go back a little bit, kind of like where I got started in real estate, and then kind of like why I'm doing what I'm doing now, is that I purchased my first apartment building when I was 18 years of age. I was still at university at the time. And then, but when I bought that apartment building, it was not a grand plan to achieve financial freedom. It was really because I had met a mentor, somebody that was a real estate investor. And we can go into more details if you want, but it was very interesting. And because he was there, then I said, okay, let me I'll just do this. 18 years old. And it's like, okay, that's something to do. And so I bought an 8-unit apartment building, and that was cash flowing, no money down, because that's exactly the amount of money I had. And and that was pretty good. That was my first experience. And that really showed me at that point that it was possible for me to make money without working the 9 to 5. But I was working as an actuary. I was studying as an actuary. I graduated and worked as an actuary for a consulting actuary for a while. And then, then I went into high tech, lost lots of money on the dot-com crash. And that's when I realized that I want to be more in control. I had a lot of money invested and working for companies. It was very exciting to work in the high tech field, obviously, with all the stock option and everything. But after I lost all that money in 2001, I thought I want to be in control. And that really focused me on passive income and said, this is what I'm going to do now. And did all kinds of different businesses, a gourmet sauce company, a catering business, low carb grocery stores and whatnot. So all kinds of different businesses. And then I ended up going back to real estate investing at that point. And I had my two sons. Actually, one of my younger son came to me and said, I want to do real estate investing. And I said, okay, well, that kind of threw me back to when I was 18 years old. And then I said, okay, well, let's look at that again. Let's see how we're going to do this in California and all of that. And so that's kind of how we got started. Got started with try to do some flips here, try to do commercial, and really trying to find our footing, find the best strategy for the resources that we have. And then really did a lot of tweaking and all of that until we finally ended up finding rental properties and look for rental properties that were cash flowing out of state. And our first rental properties was actually in Memphis, Tennessee. And I actually went to see it. I actually arrived from yesterday. I was in Memphis. I was in Memphis this last weekend, and yeah, so just that's kind of how we got started. One single family home, and bought it distressed, rehabbed it, rented out, and so yeah, so that's kind of how we got started.
Very cool. Very cool. That's quite the journey. So you said that was an eight unit that you bought when you were 18.
That's right. Yeah.
Very cool. And then you went on, and it sounds like you're quite the entrepreneur. You started several other businesses and had other business endeavors, and then you ultimately found your way back to real estate.
Yeah.
So you do real estate investing full time? Is that pretty much your main focus? And what is it that
that's what I do now.
Okay. And what is it that you guys do? What would be your specialty, or if you could explain?
So we're a single family turnkey rental provider. So we buy distressed properties, we renovate them, we rent them out, and then we sell them to investors, new and experienced, people who are looking to build a passive income portfolio, achieve financial freedom or retirement or early retirement. And yeah, we just put everything together, and then they just it's turnkey. So it's cash flowing from day one. There's already a tenant in place, and then they can get started right away.
Awesome. So that's truly a real estate investing business that you guys have going. You pretty much, you guys do the legwork and the heavy lifting, and I would imagine you have a network of investors lined up, potential investors lined up that maybe don't have the time necessarily to go out and do what it is, or the expertise that you have to go be able to do what you do, but they've got money that they want to invest and perhaps diversify from their typical portfolio. And you can make that happen for them. So that's really cool. That's a lot of good stuff there. I want to ask you a few questions about how that works. Finding the properties. Do you go through on-market properties typically? Do you work with wholesalers? Do you guys contact homeowners directly? How does that work for the most part?
Yeah, so we buy about we do 10 houses per month. So our goal this year is about 100. Last year we did 85 single family rentals. So right now our target for this year is about 100. Initially, before coronavirus, it was 120, but I think we're going to be around 100 this year. And so yes, we buy from everywhere. So we buy from MLS, we buy from pocket listing from agents, we buy from wholesalers. So yeah, we buy from anybody that brings us a deal. I mean, we're gonna look at it, and so that's when you buy that kind of volume, you can't just rely on one source. So you cannot hit them all.
Yeah, that's a lot of volume, and I would imagine you guys have a reputation by this point of the people that you work that bring you potential homes to buy. They know that you guys are going to take it down. You're serious. You have the ability to take it down, and equally as important as having the back end buyers lined up so that you guys aren't sitting with inventory. And I would imagine that took some time to build up a network. But where would you say is a place to start building a network of potential buyers like that, or how did you guys get your list?
Yeah, so exactly. So I think the biggest thing is social media. Definitely. I mean, we are, and this is why we are on the podcast. That's why I have a YouTube channel. I also write articles for different, like for Forbes and Business and Disrupt magazine and stuff like that, to kind of like become the expert in real estate and be seen as the expert in real estate in turnkey rentals. So that way we have a lot of people that are approaching me and my sons and my wife to kind of like, hey, I'm interested in that. I'm interested in, I'm tired of working 9 to 5. I want to kind of think about retirement a little bit, or maybe retire early. So then they contact us, and then we add them to our list. Sure. So and we also have articles on our website. We have a blog, obviously, martelturnkey.com. So there's like a blog in there where we write a lot of articles and explain why we're doing this and how they can leverage our expertise to build their own passive income portfolio.
Awesome. So obviously we talked about how you find the properties and then how you unload them. There's a lot of meat in between there. That's the
Yep.
part, that's the hard work where a lot of the hard work takes place. If you're doing over 100+ properties a year, you must have quite an operation going. Is it
Yep.
just you and your family? Do you have project managers? Is it in-house labor mostly, or do you guys subcontract a lot of stuff out? I mean, that's almost like a home improvement contracting business in of
Hmm.
itself right there.
Yeah.
What does that look like?
So our core is really, we have 8 people at the core, eight employees, eight people part of the company. Then the rest, the property management company. I mean, we're doing it in Memphis and Cleveland. So we have a property management company that is a third party
Mm-hmm.
property management company. So they handle that piece of it. We're very tightly integrated with these companies because we take them on. We add the properties to their portfolio. We manage with them, and so there's a bunch of integrations,
Sure.
and communication that we have to do with them, as well as with the contractors. So we have a number of third-party contractors that we're dealing with. In Cleveland, for example, we have about 10 contractors. In Memphis, we have 3 contractors that we're working with, and so that's kind of how we do that. And then we have for each of these region, we have somebody that is on the ground, kind of managing and coordinating all of
Mm-hmm.
that. So we have one in Cleveland that he's building a team of his own to kind of like manage all of that, and then kind of go around, make sure he manage all the contractor. And then my son is actually my younger son is actually in Memphis right now, and he's going to be handling the operations on the ground there. So all the coordination that's going to happen with the contractors and the property management company.
Awesome. Yeah, I talk a
Yeah.
lot about having a team in place, whether it's a realtor, property manager, contractor, because those really are like partnerships. It's got to work for everybody.
Exactly.
So
Yeah.
if it's not working for the contractor, it's not going to work for you guys, and vice versa. So everybody does need to pull together, and that's smart. Having an actual person on your in-house person on your team in
Yeah.
those markets to really kind of pull those pieces together.
That's right.
And that gives that allows the ability to invest and do all sorts of things out of state when you've got those pieces in place,
Mm-hmm.
and those key partners in place, especially if you
Yeah.
have somebody on the ground in that market to pull it all together.
Yeah.
I mean, that allows you to do a lot of different things.
Mm-hmm.
So
Yeah,
do you
that's
guys?
exactly true. That's exactly true because and this is when we decided to go out of state. So in 2001, I actually wanted to show the dot-com crash, and I said, okay, well, I want to do passive income. I still had some money left over after the crash, and I said, okay, well, I want to invest it in real estate. And actually, I think even before that, before the crash, I was actually looking to buy apartment buildings in California, where I live in the San Francisco Bay Area. And but I looked in California, and really I couldn't find anything. It was kind of like 3 hours away to find something that would cash flow. And at that time, I didn't want to drive 3 hours, and I hadn't, in 2001 there was no iPhone with
Yeah.
cameras and videos and stuff like that. We often forget, right? I mean, we
Yeah.
think that these iPhones and then DocuSign and electronic signature and stuff like that have been there for 20 years ago and stuff like that. These are very recent.
Mm-hmm.
These tools are critical to enable us to go out of state. So when we decided to go out of state, this is when we said, okay, what are the resources that we need in order for this strategy, out of state turnkey or out of state rental properties, for that strategy to be successful? So, well, we had some money. We knew that we needed a team on the ground, somebody that would coordinate, that we would be able to coordinate with, that would be highly, that would be able to interact with us very quickly. And so that's when we started looking at that. We looked at realtors, we looked at property management company, people that were highly responsive, and they knew the business that we were doing. And there are not that. We were very lucky to find the individuals that we have and the teams that we have. But yeah, I mean, they're out there. You have to look for them.
Yeah,
And
that can be half the battle a lot of the time, finding the right partners, finding the right people to partner with. But I mean,
Yeah.
it means so much to being successful. I guess you guys do have a quite an operation. It sounds like. How long
Mhm.
did it take from when you rebounded after the dot-com crash and then some of your other endeavors to when you went back into real estate? How long did it take you to build up to the point where you guys are now?
Yeah, so it took about 4 years. So we started 5 years now. So yeah, so that's how long it took to get there. We a couple of years before that, we were trying to do kind of the flip, as I mentioned. We tried to do wholesaling in California. We tried to do commercial. We had a big building in downtown San Francisco that we had under contract, and we tried to put all the funding together for all of that, and that fell through.
Yeah.
But yeah, so so it took really like 4 years for us to get to where we were. With my older son was kind of like leading the charge. I was working full time at the time, and I was in the evenings and weekends. I was like working with my sons and in the business and stuff like that. But all the leg work, all the grunt work, my sons have done that. All the calling for all the realtors and finding the realtors and all that. So that
That's
was a
helpful.
lot of work. Yeah.
Yeah.
Oh yeah, absolutely. And this is when we look at that and we say, again, I'm going back to I do this because it's kind of a triangle for me. Like I have a strategy alignment triangle in my book. And then basically at the tip, you have the strategy, and then you have the resources is another point of the triangle that is critical. When you're working full time, and I was working full time, and in fact, it's probably more than full time. I was a project manager working on, very critical project in the healthcare industry. And I was working a lot of hours as a consultant. And if I didn't have my son, one of my key resources at the time was time constraint. I couldn't go and invest out of state. I wouldn't have been able to do that. I would have bought turnkey rental properties at the time if I hadn't had my son.
Right.
So, but because my son was 100% available and he was eager to work on that, and I had my other son who was a realtor as well, and then they were kind of both working on that. So I had the time on my side. I had two key people on my team that were, able to push forward as I was working full time. And eventually, my sons actually told me that, okay, I can get out of my 9 to 5 now. There's enough revenue. There's enough thing going on right now. It's time to get out of the 9 to 5, and I did that last year.
That's awesome. That's quite a team. When you're able to work with yourself like that, that's a great team, and everybody pulling for each other. And that triangle you're talking about, it's almost like the point is the focus of where you want to go, and the other points behind it, below it, are almost like the foundation that you need to put in place in order to have that stability and that structure in place to achieve that key goal that you're after.
That's right. And the goal is really to tweak all of that, to tweak that. So at the top, you have the strategy. Then on one other point at the base is the resources. So that's your time commitment, your money, and all of that. And then at the other point of the triangle at the bottom is the market. So where are you going to invest at? Where can you find these opportunities that will help you achieve your strategy and reach your goal?
Yeah, very cool. Very good. That's a good way to put it for people that are visual out there. It's a good way to visualize it. So you talked about a lot of different things though. You guys have your turnkey investing company, but you mentioned apartment buildings. It sounds like you've checked all the boxes. You've kind of gone through the list of real estate investing endeavors and found the niche that works for you guys, found what you guys do well. Do you ever retain any equity when you sell it to your investor, or do you keep some for yourselves? Do you guys have a portfolio of your own that provides you guys passive income? Because it sounds like a lot of what you guys are doing is more transactional income. And you guys are working for it. It's a job more or less. But do you guys keep some for yourselves to have that stability that's provided with passive income of your own?
Yeah. So we have our apartment buildings that we rely on for passive income. But my two sons are young too, so they, it's not like they're gonna sit there 25 years old and 23 years old. I mean, they're not ready to sit at the beach
They got to do
and stuff
something.
like that. And I won't let them,
Yeah.
so I mean, they want to work, they want to grow the company and all of that. And so we're doing that, but we are accumulating. We started actually with single family rental. Our first one, as I mentioned, we bought in Memphis, and then we bought a few more and all of that. And then initially we were not even thinking of doing a turnkey rental business. That was not our goal. Our goal was to build a passive income portfolio. And but as we were doing this, accumulating properties and all of that, so people, our friends and family, started asking us, like, what are you guys doing? You know, this is we always did a lot of different types of businesses, so it was not unusual for them. You know, what are the Martels up to? What are you doing? And then so they would ask us and say, "Oh, we're doing this," and stuff. What? Well, in Memphis? Who invests in Memphis? Wow, you know. And so that's kind of how we got started. And then there were more and more people were interested, and so then we said, oh, maybe we need to kind of help other people. We need to turn this into a business. But initially, that was not our intention. We just happened to come upon this.
Yeah, I mean, that's really cool, because I mean, real estate investing in itself has a lot of intrigue to it. You know, it captures a lot of people's interest right off the bat. You know, if somebody hears of a friend or family in real estate investing, it's always a great topic of conversation. People are always curious about it. And what you guys are doing, it sounds like you've found a way to do what you do well, which is find these distressed properties, get them rent ready, sell them for transactional income that not only allows you guys to live comfortably or pay your bills, but I would imagine you also roll some of those proceeds into your multifamily investments for yourself that provide more of that stability and passive income. And I know you do speaking, you've got a book out, and I know you stress a lot of the importance and value that real estate investing and the passive income that it provides can bring compared to like your traditional 401k and retirement plans. What are some of the benefits that you see that real estate provides compared to the more traditional retirement that so many Americans out there rely on?
So technically, there's nothing wrong with the 401k. It's a great way to save money, and that's tax deferred and all of that. But it really depends on how this money is invested. Right now, I mean, the stock market is up, and times are great. Maybe the stock market is going to go down. And then if you decide to retire at that point, then what's going to happen with your retirement? So the key, and what people don't forget, is they save money, but then they don't think about, and they don't know, they're not being told how you're going to convert that cash, all that money at the end when you're ready to retire. How are you going to convert that to a stream of income, an annual stream of income? The traditional path that they're talking about is annuities. And annuities, you can use, if you have 401k right now, just go and search for an annuity calculator, and then look at how much money you think you're going to have at retirement, and then start doing the calculation for your annuities. You'll be very disappointed by the percentage that you're going to get, the amount of money that the return you're going to get on that money. So sometimes it's going to be like as low as 3% if you want to have it indexed, if you want to have a survivorship, if you want to have all these kinds of index I mentioned. So all these things, right? So that, and you're going to end up getting only 3% of that money per year. So that doesn't make a lot of sense. And if you pass away, then it would nothing goes back. The two parents pass away, nothing goes to their children, so you kind of lose that. You don't have that legacy anymore. You work all your life to accumulate $2 million, let's say, to retire comfortably, and then you pass away a couple of years later, but you didn't get necessarily your $2 million back out of it.
Yeah.
Probably not. So that's one aspect of it. The other, they talk about also kind of like taking away like 4% off your assets on a regular basis. So that kind of works if you have a fund that's outside the 401k, but because of the 401k, you have to extract the money at one point. You can't have your 401k until you're 90 years old. There's a date at which you have to extract your money. But so that these are the two main areas that they're talking about.
Yeah.
With real estate investing, you have a passive income portfolio, a passive income that's coming through that you can start working on right now. You have tax benefits, you have appreciation, you have inflation adjustment because the rent keep going up, and then you can as every year with inflation, and you have a legacy for your children. When you pass away, your properties are actually being passed on to your trust and to your children.
Yeah.
So you hit all the different all the things that were important to me, and I suspect are also important to a lot of people out there.
Yeah, that's a lot of good stuff. You touched on a lot of great key points there. I mean,
sorry.
It's good. I think just to try to break it down a little bit, a lot of people rely on their financial planner or their financial advisor. They dump it into 401k, IRA, and they don't really know exactly what goes on behind the curtain, or what, like you brought up, the second stage to that is once you're ready to have that money drawn out, it's going to, for the most part, be stagnant, and it's going to start to dwindle unless you can find a way to have that money make money for you. And you don't necessarily have to wait until that day comes where your money's forced out. You can start to do other things with that money. And real estate doesn't only provide good diversification, but the thing that I find it so attractive is, whether a 401k or an IRA, the biggest element to it that I don't like as much is that you really don't have any control. You mentioned a few headwinds that potentially could cause the markets to go up and down, of which you have no say in whatsoever.
That's right.
With real estate, if you start to skim some money away from your 401k or IRA and diversify, not only all the benefits that you just discussed that you get with real estate, but you're also in control of the asset itself, the vehicle, the property. So you can decide if for some reason, the market seems really heated and it's possibly a good time to sell and go liquid, because there are some headwinds that may affect the valuation of your properties. You can go liquid very easily. You can move the money into cash and wait for another buying opportunity, among many other things. Is that one of the advantages that you see with real estate? Is not only that it's a good diversification from your traditional retirement plan, but the fact that you more or less can control and have a say so in the success of the return you're going to get, more so than what you would traditionally.
Yeah. So exactly. So at least I'm in control, right? I'm not in control of the economy. I'm not in control of all these things, but I can control the levers of my business to really kind of like adjust a little bit, kind of like what's going on. What do I see in terms of risk in terms of my business? So just to give you an example, so in last year, everything was great. We were in growth plan. We did 85 single family like turnkey rentals last year. Perfect. And then we set our goals for this year, 120 units. And then of course, we work on with some we were planning to use a lot of private money lenders to fund a lot of these deals and help with our growth. And coronavirus hits. Then we kind of look at it and we say, okay, well, what are the risks now? The risk is that maybe nobody's going to buy the properties. Maybe everything is going to be delayed. Maybe we don't know. But we kind of listed all the different risks that could happen. And then we said, okay, well, based on that information, then I want to kind of like mitigate that risk a little bit. So instead of doing private lending, then I'm going to go more joint venture. I'm going to seek investors that are going to share the risk with me. And then the returns are higher. If things go well, the returns are much higher for them. But if things don't go so well, and instead of selling in 3 months, we sell in 6 months, then we still make some money, but it's not, it's not as bad as me having to pay interest to a private lender.
Yeah. Yeah, that's a great way to put it.
Right.
Yeah, that's about
pulling. So this is just a real example that we had to live through, and we have some levers that you can adjust to kind of mitigate the risk and make sure that you make some money still.
Yeah, absolutely. That's a great way of putting it. You've got the levers to pull. You don't have control necessarily of the economy and what the market's going to do, but you're able to pivot based on whatever information's out there. And that's another cool thing about real estate is the creativity behind it. Like you said, you switched directions from hard money to joint ventures, shared risk. So you can get very creative with the different types of structure behind whatever investment it is you're doing. Yeah.
We actually never use hard money lenders, so we always use private money. Yeah.
Gotcha. Okay. Which is we could have a whole nother podcast on private money. But so for people that are listening, may hear what you do, and it may sound like a lot, but that's not necessarily the case. You don't have to go out and pull money from your 401k and try to do a turnkey rental business. The great thing is that there's companies like you that allow people to diversify and invest in a rental property that's turnkey and ready to be rented. So what suggestions do you have for people out there that are looking to do just that and want to get more into the real estate investing side of things?
So for me, like I would look in terms of strategy, I think that everybody's number one goal should be to achieve financial freedom. So this is something that is key. This is something that is inevitable. We all want to retire at one point. We're all going to have a period of time that where we're not going to have as much income as we thought we would. And, and we probably all want to leave a legacy for our children. So number one is financial freedom. And then find a strategy that works for you based on the time that you have to allocate, the resources that you have. And then for me, the turnkey rental for single family is the best vehicle. It's fairly flexible. Because you can accumulate, one house here, one house per year if you want, or 2 houses per year. And you can work that up into a significant portfolio. So that's basically it. As soon as you have to start this as early as possible, because that you're gonna get on top of the revenue, the cash flow that you're gonna get tax advantages. You're gonna be able to deduct your interest expenses, a lot of depreciation on these properties and all of that. So so for all these reasons, I think this is a critical investment. You don't get those things in the stock market.
Absolutely. So I mean, you keep yourself very busy. You've got a book out. How can people find out more about you, learn a little bit more about what it is you do, and if perhaps they're interested in getting into real estate investing and finding turnkey rentals? Is there a place that you might be able to help them out with that?
Yeah, sure. So one of the best places to reach out is a book. It's marteleric.com/book if they want to get my book. So that's the best place. I'm on Facebook, eric.martel.ca on Facebook. So that's another good location to get me. I'm really I'm pretty passionate about the financial freedom as your number one goal. So if you need help, if you want to have, if you have any questions and stuff like that, I would encourage you to contact me, and then I can send you in the right direction. It doesn't have to be necessarily with me. If you're interested in other markets that I don't have, I mean, if I know somebody, I would refer you to the right individual.
Awesome. And is that more or less what the book you have out is about passive income and financial freedom?
Yes, it's really about so it's called Stop Trading Your Time for Money. So it's about, it's a how-to guide for the middle class to achieve financial freedom, early retirement, and leave a legacy for their children. So this is pretty much it. And really, a lot of it is about really breaking the barriers to financial freedom. So some of these barriers are about our what is that called? Kind of our attitude or our
mindset.
Mindset, exactly. I'm sorry, I was forgetting the word. So a lot of it is about that. Some of it is about also organizing, like I was talking about the strategy alignment triangle. So that tool, kind of like, yeah, I want to achieve financial freedoms. What are the different strategies? So I list all the different strategies and kind of highlight what are the risks and also the time requirements for each of these strategies to help you pick the right one based on the resources that you have available. And then we can look at the market. I explain how we picked our market and explain the details. I also have like a website where I share my information, the data that I collected on all the MSAs in the United States, all the data, and then you can look at that. And that's actually on investor-list.com if people want to look at that. And you can filter and find the right market for you, that for your strategy there. And then finally, it's about some skills. It's about how do I look at the financial reports, like a P&L, a balance sheet? How does that work? But also cash flow, which is critical in my business, and kind of work from that. And then it's about taking action. So my book is really kind of like helping you through that whole journey, and at the end, you want to make a deal. So you read the book, and as you read the book, the goal is that by the end you have made a deal. You've actually acquired a property to get you closer to your goal.
Very cool. Yeah, I mean, cash flow, you're right. That's any business, I think, pretty much needs cash flow in order to survive. But everything you just said, the taking action, the motivation, the mindset, that's great because you're at point A and you have a point B that you're ready to go get. But what you're talking about in the middle of the triangle is how you're going to get there, and educating yourself, having the knowledge of the different paths that you might be able to take and what's going to give you the most chance of success. It sounds like a lot of that can be found in your book. So it sounds to me like a great read. I could go on and talk real estate with you all day. This has been a pleasure having you. I want to thank you again. It's Eric Martel for joining me. And before we sign off, I want to remind everybody one last time to go check out theinvestnest.com. You can create your free member profile, network with other members, write your own blogs, check out our blogs and articles, and go check it out. We're also on Facebook, Instagram, and Twitter at The Invest Nest. And thanks for joining us today, everybody. We hope you join us again next week. And Eric, again, it's been a pleasure. Thanks so much for joining me on the show.
Thank you, Travis.
All right, have a good one.
Thank you for joining us on the Invest Nest Real Estate Investing Show. Be sure to join theinvestnest.com and start learning and earning today.